High-risk merchants are businesses that operate in industries with a higher than average risk of chargebacks, fraud, and regulatory requirements. Most common examples of high-risk industries include online pharmacies, telemarketing, adult entertainment, and online gaming, as well as airlines, travel, and vacation services. High-risk merchants often face challenges in identifying fintech organizations that can ensure them a seamless payment processing user experience for their customers. In most cases, high-risk merchants have two options when looking for fintech payment services for their business: payment services providers and independent sales organizations. In the fintech world, payment services providers are commonly referred to as PSPs or as IPSPs, payment facilitators, PayFacs, or Internet Payment Service Providers. Independent sales organizations, or ISOs, are also known as member service providers, MSPs, third-party agents, or TPAs. Both PSPs and ISOs have the following payment solution components: payment processor, payment gateway, merchant account, merchant services. Let us present each of these components and how they work in both solutions. What is the role of a payment processor? Payment processors communicate between the merchant, issuing bank, and acquiring bank-to-transfer sales funds. A PSP manages the whole process by itself or in cooperation with a specialized third-party processor. In contrast, an ISO always integrates third parties to handle the payment processing. What is the role of a payment gateway? A payment gateway collects, encrypts, and verifies online customer card information. PSPs usually have their own payment gateway, unlike the ISO, which partners with several payment gateway providers to offer their services. What is the role of a merchant account? A merchant account is a bank account used by the merchant for payment processing of their customer transactions. Merchants usually have separate business bank accounts through their commercial banking service provider for such items as payroll, operating accounts, savings accounts, or lines of credit. Obtaining a high-risk merchant account with the proper merchant category code, or MCC, is the primary step in establishing the optimal setup for high-risk payment processing. Having the correct 4-digit MCC number assigned to an account results in both staying compliant with credit card associations, such as Visa and MasterCard, and being charged the proper fees that correspond to their business's specified risk level. With a PSP, a merchant gets a sub-account under the PSP's master merchant account and the option of having its own third level of sub-accounts. On the other hand, an ISO provides a merchant with an account from the ISO's partner bank and the possibility of second-level sub-accounts. What is the role of merchant services? Merchant services facilitate secure and efficient payment processing by ensuring all the tools and support for the smooth running of business operations. PSPs provide all the merchant services, including billing support, merchant support, fraud protection, risk mitigation, chargeback prevention, and compliance management. ISO integrates with third parties and typically provides merchant support, chargeback prevention, and compliance management, while the third parties are in charge of billing support, fraud protection, and risk mitigation. Now that we are familiar with both organizations and their components, we can summarize the advantages of each. A PSP is an all-in-one platform with a complete assortment of tools needed for flawless payment processing. It is a perfect fit for startups and mid-sized businesses due to the reduced level of credit checks, no minimum or maximum transaction volume limits, and a small rolling reserve for chargebacks. An ISO offers customized options to the merchant, allowing him to pick and choose components from the ISO's different partner providers. This solution is more suitable for established companies and enterprises because it hands full control of the account over to the high-risk merchant, along with account integration and a no maximum transaction volume limit. In conclusion, the best payment processing setup for high-risk businesses depends on a company's size and industry. High-risk merchants should carefully evaluate their internal tech proficiency and the capabilities of their IT departments, as well as payment options before choosing a payment processing solution that adequately meets their specific needs. Trusted for over 25 years, CC Bill is a high-risk merchant account and payment gateway provider that streamlines and protects your transactions.